Welcome back to our series National Income at Ease. So in our previous video, we have already understood what are the different methods through which you can calculate national income. So we have seen everything related to those methods, like the meaning of method, what are the components of methods, what are the formulas, very important part, and plus all the precautions which you have to take care while computing or calculating national income. So now comes the most awaited part and the most crucial part of the chapter, that is your numerical questions. So usually we get scared of these numerical questions, but trust me, these questions are very easy once you are familiar with the methods, with the precautions and with the formulas. It becomes very interesting and very easy to solve the questions of national income. So here also in this video, we are going to understand or see the numerical questions of the three methods. So first is value added method, then will be income method, and lastly expenditure method. So we'll be solving 2 questions per method. So let us begin with our video. First, it's value added method. We already know what is value added method. We know the formula, we know the precautions, we know the meaning of it. So let us look that what type of questions are expected. First, calculate value added by firm A and firm B. So you will be given a table full of informations. Now what you have to do is you just have to analyze the table and then start finding out what the question is asking you to find. So we know that value added, the aggregate of value added is nothing but GVA at MP. We also can write it as GDP-MP. And in this particular question, they are asking you to find out value added. That means nothing but GVA-MP or GDP-MP. Now they have been given the information of 2 firms. So what we will do? First of all, we will find out the GVA-MP of firm A, and then we will be finding out GVA-MP of firm B. So individually you will be finding out the GVA-MP. Now let us look what are the informations which they have given to us. So they have given us sales by firm A, purchases from firm B by firm A. So that means these are the purchases of firm B which they are making from firm A. Then purchases from firm A by firm B. That means these are the purchases which firm A has made from firm B. Sales by firm B, closing stock of firm A, closing stock of firm B, opening stock of firm A, opening stock of firm B, and indirect taxes paid by both the firms. That means indirect taxes for firm A and firm B is same. Now you have got all the information. First thing what you will be doing is writing down the formula. So for value added, the formula is value added. What is the formula? Let us write the formula first. Value added is equals to value of output minus intermediate consumption. So value of output is not directly given to us in the question. So how we will find out value of output? So value of output, remember first of all we are finding it for firm A, is equals to sales plus CIS minus intermediate consumption. So let us look towards the sales. Sales by firm A is how much? 100. So 100 plus closing stock, change in stock is equals to closing stock minus opening stock. So let us see, is it given in the question? So closing stock by firm A is 20 and opening stock by firm B is 25. So yes, both the informations are given to us. So 20 minus 25, and minus intermediate consumption. Intermediate consumption means nothing but your purchases, okay? And here directly purchases has been given to you. They have not given you domestic purchases. They have given you directly purchases. That means both imports are added over here. So, purchases from firm B by firm A. So, firm A's purchase is nothing but 40. Now, what you have to do? Just solve this much minus 40. So, 100 plus minus becomes minus 5 minus 40. So, you all know, I guess, right? When you do multiplications of plus into plus, you get plus. Plus into minus, you get minus. Minus into plus, you get minus. And minus into minus, you get plus. Very, very, very extremely important. You should know this much. Okay. Now, you just have to solve it. Whatever the answer you are getting is nothing but your value of output for firm A. Similarly, you will be finding out the same thing for firm B as well. So, let us look at the solution. Value added by firm A, value of output minus intermediate consumption. Value of output formula is sales plus CIS and minus IC. CIS is nothing but closing stock minus opening stock. 100 plus 20 minus 25 minus 40, 100 minus 5 minus 40. This is what we were also getting, is equals to 55 crores. So, 55 crores is nothing but GVMP or value added by firm A. Now, in the similar manner, we will be finding out for firm B. The formula will go as it is, value of output minus intermediate consumption. Value of output is equals to sales plus CIS minus intermediate consumption. CIS is nothing but your closing stock minus opening stock. So, let us see the sales value. Sales by firm B is how much? 200. So, we will write down 200. Then, CIS is closing stock minus opening stock. So, what is the closing stock of firm B? 35 and opening stock of firm B? 45. So, write down that 35 minus 45 minus intermediate consumption. So, purchases is how much? 60. Okay. So, we will write down here 60. Solve this bracket. Plus 35 minus 45 is how much? Minus 10 minus 60. So, 200 plus into minus, minus 10 minus 60. When you solve this, you get your answer as 130 crores. So, that means the value added by firm B is 130 crores. I hope the formula was easy for all of you and you have understood the entire question very easily. Just you have to know the formula and you will get every information or maximum information from the question itself. Now, with this, we'll move on towards our next question. Here we have to calculate GVMP and national income. So, now they have not given you the aggregate of national income. They have just told you to find out national income. In such a scenario, it is very important for you to know the aggregate of domestic income and national income. The aggregate of domestic income, say suppose, is NDPFC and the aggregate of national income is NNPFC. And here first of all, you will have to find out GVMP. So, GVMP is nothing but your GDPMP. So, if you get one aggregate, you can very easily find out the other aggregate. Yes, of course. If I have one aggregate, I can very easily find out the second aggregate. So, in the question, let us see what all things are given. First, value of output is given, primary sector, secondary sector and tertiary sector. Then, value of intermediate inputs purchased by. So, value of intermediate inputs are given, primary sector, secondary sector, tertiary sector. Then, we have indirect taxes paid by all the sectors. So, we have IT paid by all the sectors, that is primary sector, secondary sector and tertiary sector. Consumption of fixed capital of all the sectors. Now, here comes consumption of fixed capital. What it is? It is nothing but your depreciation. The other name of depreciation is consumption of fixed capital. Factor income received by the residents from the rest of the world, NFIA. So this is received. If you all remember, what was the formula of NFIA? Net factor income received from abroad minus net factor income paid to abroad. So received is given to you, paid is also given to you. And subsidies received by all the three sectors. So all the three sectors again means primary sector, secondary sector and tertiary sector. So if you all remember in our last class when we have made these things, when we studied these things, we have said that in an economy all the three sectors are included, both primary, secondary and tertiary sectors. So let us find out. The enough data is given to you. We can very easily find out. So let us find out. First, GVA at MP. It can be also written as GDP at MP. Value of output minus intermediate consumption. So value of output is how much it is given to us. Value of output of all the three sectors is given 800, 200 and 300. So yes, value of output is 800 plus 300 plus 200 minus intermediate consumption. So what is the intermediate consumption? Again for three sectors they have given 400 plus 100 plus 50. 400 plus 100 plus 50. Now you have to calculate this. Okay. So let us look how much we are getting. If you calculate this, we get the answer as 750. We are getting the answer as 750. 800 plus 300 plus 200 minus 400 plus 100 plus 50. So here comes 550 and here 1300. So 1300 minus 550 is your 750. Now you got GDP MP. Another thing what they have said to find you, they have told us to find out national income. And what is the value? What is the aggregate of national income? It is nothing but NNP at FC. So if you want to find out one aggregate and you have one given is one aggregate, very easily we can do it. We know how to do the conversion of aggregates, right? So the aggregate which you have to find out, keep it on the left hand side, and the aggregate which you have, the value of aggregate which you already have, keep it on right hand side, that is GDP MP. Now if you want to go from gross to net, what do we do from gross to net? Minus depreciation. From domestic to national, to go from domestic to national plus NFIA. PP remains as it is. From MP to FC, from market price to factor cost, NIT. So minus NIT. GDP MP you have already 750 minus, let us look what is depreciation. So consumption of fixed capital of all the sectors, that is 80. So 80 is your depreciation plus NFIA, net factor income from abroad minus to abroad. So what is from? From is 10 and paid is 20. So 10 minus 20 minus NIT. NIT's formula is IT minus subsidies. So IT is how much? Indirect taxes 50, subsidies is 20. So basically 50 minus 20. Now you have to just very easily solve this bracket. You will get the value of NNPFC. So basically you have gotten both the values which they have asked you in the question. Two things were asked, GDP MP and a national income. So national income is nothing but your NNPFC. So see, this is how you have to write your proper solution. A, GVMP is value of output for all the sectors minus intermediate consumption of all the sectors. So we took the values, we did the minus subtraction and we got the value. We got the value of GVMP as 750 lakhs. National income. Next we had to find out national income, that is nothing but your NNP at FC. So GVMP, and with the help of GDPMP you can very easily find out NNP at FC. That is what we did. Okay. And after doing all of these things, we get the value of an NPFC. I hope these sums are very easier for all of us because nothing you have to do. Maximum data has been already provided to us in the question. It's just that we should know the formula as well as the alternative names of things. Okay. Next method is income method. We know income method, we know the method, precautions and everything. Now let us see how do we solve the sums of income method. Calculate NDPFC by using income method. Now you have to find out NDPFC by using income method. What all things are given to us in the question? Compensation of employees is given to us, operating surplus is given to us, mixed income is given, saving of non-departmental enterprise, income from property and entrepreneurship to government administrative departments is given. All of these things are given to us. So, what do we have to do? First of all, as usual, we will first write down the formula. You have to find out NDP at FC. So, NDP at FC is equals to compensation of employees plus rent and royalty plus interest plus profit plus mixed income. This is the formula for NDPFC. To find out income method, you have to write down this formula. When you make it together, like when you make rent and royalty, interest, profit together, it becomes nothing but your operating surplus. So, whenever operating surplus is directly given to us on the question, you don't have to separately look for rent, royalty, interest or profit. You will just take the amount of operating surplus. So, let us see what all things are given. Compensation of employees is given. So, 3000 plus operating surplus is directly given to us. So, no need to look for rent, interest, royalty or profit. So, it is how much? 2000 plus mixed income. Let us see, mixed income is there. Yes, 1000 plus saving of non-departmental enterprise and income from property and entrepreneurship gets added. So, 4000 plus 5000. So, 3, 4, 5, 6, 7, 8, 9, 10, 15. 15,000. Very simple? Yes. So, NDPFC is equals to compensation of employees plus operating surplus plus mixed income of self-employed plus income from domestic product acquiring to public sector. Income from domestic product acquiring from public sector is nothing but saving of non-departmental enterprise plus income from property and entrepreneurship. Just have to add everything. You will get the final answer, that is NDP at FC as 15,000 crores. So, that was the first question for income method. Let us move towards the next question of our income method. Here again we have to calculate NDP at FC by using income method. See, at many a times they will inform you in the question as well that what kind of method you have to use in order to solve the question. But many a times only components will be given to you in the question, and by looking at the components you have to make a proper thorough analysis that which method will be most appropriate over here for the particular question to calculate national income. So, wages and salaries is given, rent, royalty, interest, corporate tax, dividend, undistributed profit, mixed income, saving of non-departmental enterprise, income from property and entrepreneurship to government administrative departments. Okay, well to do, well information. NDPFC formula, compensation of employees plus rent plus royalty plus interest plus profit plus mixed income. So, first let us look towards compensation of employees. What is given? You all know what are the components of compensation of employees: wages and salaries in cash, wages and salaries in kind, employers' contribution to security scheme. These are the three components of COE, out of which only the one is given, I guess, that is yes, wages and salaries are given, that is 32,100. Okay, so you will directly write 32,100 plus, see, rent and royalty is given. Yes, rent is also given, royalty is also given. 52,300 is your rent plus royalty is how much? 12,500 plus interest. So, see if interest is given. Yes, 10,100 is your interest plus profit. So, look at it, profit is given, undistributed profit. Now, you all know what are the components of profit, right? So, components of profit are corporate tax, dividend and undistributed profit. So, these all three things will go under the heading of profit. So, add all those three things, that is first 50,590 plus, you have to make a proper working note, okay, for this. I will show you how. 20,410 plus 81,000 plus mixed income. So, see if mixed income, yes, mixed income is also given to us in the question, 12,110 plus saving of non-departmental enterprise plus income from property and entrepreneurship. So, 5190 and 15,500. That's it. When you calculate the entire amounts, you will get the term NDPFC. So, see, NDPFC, compensation of employees plus operating surplus. Operating surplus is nothing but rent plus royalty plus interest plus profit. Mixed income plus income from domestic product accruing to the public sector. Wrote the all amounts, you got the answer as 2,91,800 crores. Okay, now see how you are supposed to make the working notes. First of all, compensation of employees. So, for compensation of employees, we have only wages and salaries in cash. So, directly you wrote it, that's all. Operating surplus is rent plus royalty plus interest plus profit. So, rent was given to you directly, royalty was also given to you directly, interest was also given to us directly. Profit, now from where this 1,52,000 came? So, profit is equals to undistributed profit plus dividend plus corporate tax. You add it, make a sum of it, 1,52,000, you have put it over here as 1,52,000. Income from domestic products accruing to the public sector is nothing but the addition of income from public and entrepreneurship plus saving of non-departmental enterprise. You get the amount of income from domestic products accruing to the public sector. That's it. This is how you are going to prepare a working note while solving the questions. Wherever you feel that working note is required, please make a working note because it makes your answer more representative. Fine. So, this was your sums based on income method. Last and third method is your expenditure method. So, now let us see how do we solve the questions of expenditure method. First, calculate net national product at market price. That means you have to calculate NNP at MP. What all things are given to us? So, gross domestic fixed capital formation, private final consumption expenditure, government final consumption expenditure, change in stock. So, CIS is directly given to you. You don't have to find out closing stock or opening stock. Consumption of fixed capital is nothing but your depreciation. NIT, net indirect taxes, net exports, net factor income to abroad, net current transfers from abroad and dividend. So, these are the few information which are already given to us in the question. Now, let us look towards the formula first of all. So, CF, that is gross domestic capital formation. Before going to that, let us first of all write down the formula. So, GDP-MP, we know that expenditure method is also represented with the aggregate GDP-MP. Formula is private final consumption expenditure plus government final consumption expenditure plus gross domestic capital formation plus net exports. Fine. So, private final consumption expenditure is already given to us in the question. Yes. 8,000. So we can simply write it over here. Government final consumption expenditure. Let us see if it is given to us. Yes, that is also given to us directly in the question, 3,000. So we will just simply write 3,000. Then gross domestic capital formation. So if you see over here, they have given you gross domestic fixed capital formation, but we want gross domestic capital formation. So for that, again we have formula. So gross domestic capital formation is equals to gross domestic fixed capital formation plus change in stock. So GDCFCF is given to us directly in the question, that is 400, and CIS is also given to us in the question, that is 50. So 400 plus 50 is your 450. So you got gross domestic capital formation as 450. Net exports. So net exports are also directly given to us in the question as minus 60. So you directly wrote it as minus 60. Now you got everything for GDP MP. Now finally you got the value of GDP MP as 11,390. Now what else they have asked you to find out? They have asked you to find out NNPMP. So first of all, you have already find out GDPMP. Now you have to find out NNPMP. So as usual, if you want to convert one aggregate into another aggregate, what do? The aggregate which we have to find out, we'll keep it on the left hand side, and the aggregate which we already have, the value of aggregate which we already have, we are going to keep it on the right hand side. So left hand side NNPMP, right hand side GDPMP. NNPMP, gross to domestic, what do? Gross to domestic minus depreciation. Gross to net, what do? Minus depreciation. Domestic to national plus NFIA. P and P are same, MP is same. So you don't have to touch those things any which ways. So GDP MP you got as 11,390. Yes, you wrote it. Consumption of fixed capital, that means depreciation. So depreciation also you have. Consumption of fixed capital 40. So you can write it over here 40. And NFIA. So NFIA is net factor income from abroad. So we know what is the formula, net factor income from abroad minus net factor income to abroad. So here in the question it is only factor income to abroad is given to us. Net factor income from abroad we don't have. We have net current transfers from abroad. Current transfers are not included while computing national income. So that is no more an useful information for us. Always keep this in mind. Okay. So factor income to abroad is given as minus 80. So we wrote it like that, and now you got the value of NNPMP as rupees 11,430. Very simple. First of all, when the method, you know that from which method you have to solve the question, you will find the aggregate of that particular method, and then you will jump to the aggregate which has been asked in the question. For example, in this question they have told you to find out NNPMP, okay, but you cannot directly find out NNPMP. First of all, you will have to find out the aggregate of that particular method. So the aggregate of that particular method was GDPMP. Now once you get GDPMP, you can easily find out NNPMP which has been actually asked in the question. Now let us move with the next and the last question. Here we have to calculate national income. It is nothing but NNP at FC. Lot of information is given to us over here, like net factor income to abroad, net indirect taxes, net current transfers from rest of the world, net imports, private final consumption expenditure, government final consumption expenditure, gross domestic capital formation. So here directly they have given to you gross domestic capital formation. In the previous question, they had given to you gross domestic fixed capital formation. So if that is given, then in that case you will have to find out gross domestic capital formation. Consumption of fixed capital, nothing but depreciation, change in stock, mixed income, scholarship to students. So all the information we have, they have told you to find out national income, that is NNPFFC. But as I said that first of all you need to find out the aggregate of the method which we are going to use to find out the national income. So the aggregate of expenditure method is GDPMP. So first and the foremost thing, we will find out GDPMP, and then we will find out NNPFC which has been already asked in the question. So GDPMP is equals to private final consumption expenditure plus government final consumption expenditure plus gross domestic capital formation plus net exports. So GDPMP, private final consumption expenditure, is given to us in the question, that is 5,000. Then next is government final consumption expenditure. So that is also given to us 3,000. Next is gross domestic capital formation. So that is also given to us, gross domestic capital formation 1,000. So that also we wrote it down. And net exports. So net export is given to us. So net import is there. We don't have net exports, right? So net import is how much? 200. So we know net export is equals to exports minus import. So export is not given, import is given as 200. So we will consider the value minus 200. So here that is why we wrote minus 200. Now when we calculate this, we get GDPMP as 8,800 rupees. Now you have to find out national income, that is nothing but NNPFC. So what do? The aggregate which we have already, will keep it on the right hand side, and the aggregate which you have to find out, that is NNPFC, which you have to find out, keep it on the left hand side, and GDPMP which you have already gotten, keep it on the right hand side. Start doing the conversion. To go from gross to net, we will do minus consumption of fixed capital. To go from domestic to national, we will do net indirect taxes, and to go from MP to FC, we are going to do plus NFIA. So, GDPMP is 8,800 minus consumption of fixed capital, that is depreciation, is given to us as 150 minus net indirect taxes. So, net indirect taxes are also given to us directly. Yes. So, net indirect taxes is directly given to you. So, you don't have to use the formula IT minus subsidies. Directly put the term 800. So, 800 minus plus NFIA. So, NFIA is how much? NFIA is net factor income to abroad minus 50. It's how much? Minus 50. So, plus minus plus becomes plus, you have to do the plus. So, plus 50. After doing all of these, you get the answer as 7,900 crore. Very simple. There are certain things which you have to remember while solving the questions of national income. First and the foremost thing, you should know all the components of all the methods. On the basis of that only, you can identify that using which formula or using which method I can calculate national income. Secondly, whichever aggregate is told you to find out in the question, before jumping to that aggregate, you have to find out the aggregate of the method which you are going to use to find out national income. Third, it is mandatory to know the all alternative names of things, like consumption of capital is nothing but depreciation, national income is NNPFC, likewise. So, if you are aware of all of these things plus formulas, the entire question becomes very easy and interesting to solve. Thank you for watching our video. For more updates, reach us on www.tgcampus.com or 1800-267-2677 or connect@tgcampus.com. Like and subscribe to our YouTube channel TG Campus In. Follow us on Instagram, Facebook and WhatsApp. Join our official Telegram channel TG Campus In. Chat with us on 8655682401.